Today we wanted to talk about the government-backed loans for home buyers.
Now, these are amazing loans. They really are designed for first-time home buyers. In various situations, the government has various programs and loans out there. We're just going to talk about all three and what gives you the most favorable terms. And sometimes these can be more favorable than the conventional loans.
Exactly. For example, we're going to start with the FHA loan, which is from Federal Housing Administration. And there are some benefits to using the FHA loan. What are the benefits?
Well, before we get into the ones I wrote down, I will say in the 2023 FHA saw a comeback with a lot of people who were qualified for conventional loans, but they went with FHA simply because they saw that they were getting a better interest rates on these government loans. So, I mean, the interest rates are kind of sometimes better with government loans than you would get when interest rates are higher everywhere else. You are also going to get a lower down payment if you're worried about that first time home buyer program. So it can be as low as 3.5%.
Exactly. And a little bit more flexible on your credit score requirement, meaning that with the FHA loan, we can go as low as 580.
Right. And they do allow a higher debt to income ratio if your DTI is high, you have student loans, you have cars, you have credit card payments. FHA might be the choice for you because your DTI is a little higher than what conventional would allow.
Yes. Ideally, you need to have 43% for the debt to income ratio. But I talked to lenders even yesterday, they said 45 to 46% still is okay for them.
Now, cons about the FHA loan. You are going to get the mortgage insurance premiums. That is mandatory for the life of the loan if your payment is less than 10%.
Exactly. And the loan limits also is cap amount based off the region that you're living.
Right.
No?
So, I mean, New York is going to have a very different cap than we have here in Greenville, North Carolina, just so we're clear. And then also, the home has to match safety standards, health and safety standards, which every home should. But the FHA is a little bit more hard. FHA is harder. VA is hardest on houses to see if they're going to be good fit for you.
Exactly. Now, before we go to the next one, let's do our introduction.
Absolutely. Let's hit it. Hi, it's Alan Victoria. Welcome to our channel and podcast.
And if this is your first time in our podcast and YouTube channel, make sure you subscribe and get notified.
Also, you call text all the time, 252-327-3357. We love talking to you. Don't be shy. Also, grab our buyer's guide and seller's guide in the description below.
Exactly. Now, we wanted to talk about VA or veterans. Thank you for your service. But first, we wanted to talk about the benefits of the VA loan, which is really the first things is no down payment. No, they're
right.
offering 100% financing.
Which is amazing, right? So you do have to come up with closing costs. I do have a lot of veterans who in the past have chosen to go with builders who with the no money down and then gone with the builder who is going to cover the closing costs. So they are literally walking in just like they were like a regular, like rent in many ways. So VA, if you have this program, it's good. Now, if you are going 100% and you intend to buy a bigger, better home in the future, understand, just in general terms, they like to see that you've paid off 25% of the mortgage for you to use your VA loan again. So if you buy, I'm just going to give you an example. If you buy a $200,000 townhouse in the area, that means that before you go to buying the bigger home, you would have had to, the house either had to, you paid off $50,000 or the house appreciated and you paid some off. So there's got to be that 25% in order for you to buy that second bigger home, just to give you that.
Two things that I also want to mention. In generally, we don't have any credit limit for the VA loan, but most of the banks and the financial institution, they wanted to see at least 580. Therefore, you need to check with the whomever you work as a lender to understand what is the criteria is for your credit limit. And what else that we wanted to add?
It can obviously with no PMI, but that 100% financing is going to obviously increase the monthly payment to make sure that that monthly payment's there.
And another thing also I wanted to add for the benefit or pros is debt to income ratio. For the normal loan like a FHA, we're gonna have this 43% ideally, and some lenders they go 45, 46. For the VA, actually we have more leeway this way, that like I saw even sometimes 50%, they do 50% for the debt to income ratio, which gives you more leverage for you as a home buyer to become a homeowner.
The cons about this loan has to be that mandatory one-time fee, the funding fee to the VA, and the amount is going to depend on, of course, how much that house is, how much and what type of loan we're talking about. So it really doesn't matter on how much your down payment is, what that funding fee is going to be.
And one of the cons, as my wife also mentioned in FHA loan, is here that means a strict eligibility requirement for the property, meaning from the safety and health, they are very restrict and they're very picky when they come to the property.
Yeah, they're the pickiest. Also, you have a primary residence requirement. You have to be buying the home because you intend to live in the home. You are not buying this home for a vacation home. You're not buying this home as a second home. You're not buying it as an investment home. You are going to live in the residence. That doesn't mean you have to live there forever, but you have to live there when we first buy the home.
Exactly. And now we wanted to talk about third one of the government and USDA loan, which is coming from the United States Department of the Agriculture. And straight, we're going to go to the benefits or pros of this loan, what they are.
The no down payment, 100%. If you can get a 100% financing with this loan, and if that house appraises for more, we might be able to get some of those closing costs included. So you could be walking into a home like the VA with almost no money down. So this is an amazing opportunity with the USDA.
And the other benefit is generally might be lower interest rate often compared to the conventional loan, but still you need to talk to your lender and see what is their requirement. This is generality that we are talking about.
Now, also, we did say that you can walk in with almost nothing. There are closing cost assistance with this if the house either appraises higher or we go to a builder where they're going to cover some of those closing costs, which is amazing. Those are two ways to get USDA. There are a couple cons that you have to be aware of, though.
Exactly. The first one is geographic location. Definitely we need to look at the website of the government for USDA because there is restriction for eligibility of location, and the rural area and some suburban area are generally eligible for this type of loan.
The most common reason people don't go USDA is the next one, though. It's income restriction, which means you have to be in what the government defines as moderate income. So you can't make high income in order to go to USDA. They do have specific numbers based on counties, based on married or single. So you have to kind of find out what the income requirements are and do you qualify for that, or just don't bother with it, because this is the number one reason people don't choose it.
Exactly. Therefore, for the people in the household in our area is something between 103 to 111,000 per year. Therefore, they're gonna combine the husband and wife, basically the income, and see that if you are not going over the limit for this loan.
And the last one is that credit score. USDA does require you, generally speaking, not all, but generally speaking, they do have a requirement. All the lenders we've used they want you to have good credit for this loan.
Exactly. Generally 640, but I saw some banks like Wells Fargo, they want even 660 and better. And the last thing that I wanted to mention, debt to income ratio is, again, very similar to FHA, is 43% is ideal, but they can go 45 to 46% for debt to income ratio. I hope you enjoyed this podcast and video. Don't forget to call Alan Victoria at 252-327-3357. We'd love to help you. And also write us, comment, share your thoughts, and see you in the next podcast and video.